I'm Michael Hainsworth. For the next half hour, David Burrows is here. He is the president of Barometer Capital Management, and he's taking your calls and email messages on North American large caps. Call us toll-free 1-855-326-6266 or send us off an email to marketcall@bnn.ca. David, welcome back.
Well, it's great to be here.
Well, what a great day, too. You know, Canadian jobs data came in almost 7 times better than expected. The Americans are spending again, so clearly the gray skies have cleared out and everything's good again.
We'd love to say that that's the case, and certainly there's a lot of things that have been getting better at a measured pace. At the same time, I think that we've got to be cognizant of the fact that there's been a lot of liquidity pushed into financial markets. Markets have rallied a long way. And I think that there's some messages that you can take away from the market right now and the way that various groups are behaving that you should be paying attention to.
Well, let's talk about the broader equity market first. And we saw yesterday that triple-digit sell-off in Toronto and New York. It was oil, but it was also the fact that we weren't getting more stimulus injection for the U.S. Are we seeing, what's the sentiment behind why we fell as much as we did? Okay,
so if you take a look at it globally, right? If you took all the stocks globally and put them in a basket, we got to a point recently where just over 70% of them were participating in a pretty broad-based rally. Having said that, piece by piece, there have been various parts of the world that have been backing off and seeing narrowing markets. So certainly Asia was the first. Europe was the second. Middle Eastern markets have been backing off, and African markets. North America and South America have been the outlier, and of course everybody looks at what the S&P is doing and what the NASDAQ's doing as sort of a bellwether. And clearly they've been the best performing part of the market globally because of the makeup of those indices. In Canada, it's been a different story because the market has had halting advances, but it has been much more measured, and it's been a very bifurcated market because our highly economically sensitive groups have been underperforming, and the defensive groups have been behaving better. So the fact that the U.S. market sold off yesterday on the back of some news from Europe, you know, Europe has been a little bit weak, and certainly Europe was a lot weaker than the U.S. yesterday, down almost 3% on the day. I think you just have to take in the message at this time.
Well, with the S&P 500 running as far as it has since the October lows, you know, we saw yesterday the top 5 stocks in the New York Stock Exchange were the ones that had run the furthest.
Yes.
So should we as investors be engaging in profit taking, basically selling on strength before we lose some of that profit gains that we've seen on down days like yesterday?
I think in our strategy, we prefer to stay with the things that are working. And it's interesting, yes, the very large cap stocks have been behaving better than all of the rest, and Apple's had a big masking effect in the S&P. If you look at the unweighted S&P versus the market cap weighted, which takes into account the size of the businesses, unweighted is not doing nearly as well. But there are some big businesses that are doing really, really well based on strong cash generation and dividend growth. And I think those areas do look very attractive and would continue to be there. But you want to be careful in some of the laggard groups.
Well, let's come back, find out after the break which ones you do like.
That sounds great.
David Burrows is our guest. He's the president of Barometer Capital. We're talking North American large caps. Call us toll free at 1-855-326-6266.